Hey guys, hope you are doing well. Happy New Year. Welcome to 2025. This is the first video we've got coming out this year, and we got a whole lot of really awesome things planned for the channel this year. Lots of videos around Charlotte specific, of course, market updates, and a whole lot more coming down the road. So if you haven't subscribed to the channel, go ahead and do so now. Give this video a like too. It is my 2025 forecast of what I think we're going to be experiencing in the housing market here in Charlotte, as well as we're going to look at what Realtor.com is predicting for their 2025 forecast as well. And as it's a new year, guys, new year, new beard. What do you think? Yeah? So I decided to grow this thing out as kind of a joke, really, in a way, over the holidays. And then I said, you know what? I'm going to keep this beard until my Buffalo Bills win a Super Bowl. So everybody root for the Bills. I don't want to be having this beard 20 years from now. So let's all get on board. It may come to a point where I just have to knock it off, but that is the goal. Bills win the Super Bowl, Brian shaves. All right? Everybody root for the Bills. All right, guys, so we got some good stuff today. We got some good articles I want to share with you and start this off. There's a lot of chatter going on right around now about what the market is going to do next year. And when you look at what consumer sentiment looks like, this article actually came out in December, but it says consumer housing sentiment is significantly higher year over year. Now that is really odd to me because interest rates, are continuing to go up. And of course, we'll talk more about that here in a minute. But it says jump in consumer driven largely by increased optimism that mortgage rates will fall. It says the Fannie Mae Home Purchase Sentiment Index increased 0.4 points in November to 75, continuing its sharp upward trend over the past year as consumers appear to be acclimating to the higher mortgage rates and home price environment. This month, a new record high share of consumers indicated that they expect mortgage rates to decline over the next 12 months, while fewer respondents said they expect home prices to rise. Now check this out. While only 23% believe it's a good time to buy a home on net, that component continued its upward trend and is now notably higher than last November's share of 14%. So the share of respondents saying it's a good time to sell, however, remained flat month over month, but is also up from last year. Year over year, HPSI is up 10.7%, whatever really that kind of means, but that is kind of their number. So this is very interesting to me to see this ramp up and like, hey, we're going to do something as a buyer next year. It's kind of like we are going to get into a house. We're tired of renting. We are in the area where I think we know it's kind of the new normal where rates are. We don't see any significant decrease. And again, we'll talk about rates here in just a minute. But I think that really is kind of the mentality of what the buyers are thinking out there. Drop a comment below and let me know if you agree with me or not. But I think we're going to see more activity in 2025 than we did last year. In fact, some of our listings were already seeing a ramp up in showings compared to what we had just 4 weeks ago. So that's kind of encouraging news as well. So I'm excited about next year. If you're looking to buy a house, I hope you are excited. And again, if I didn't introduce myself in the beginning, my apologies. My name is Brian Taylor. I'm the owner of Dreamline Realty here in Charlotte. If you're looking to make a move from out of state next year, or even if you're local, please give us an opportunity to earn your business. We put these videos out every week to educate our folks of not only what it's like to live in Charlotte, but to keep up to speed here on what's going on in our local market. So we're going to dive into some local Charlotte stats here in just a little bit. But let's dive over here to another article that came actually out this morning. This one here is an article from Market Watch, and it says America's frozen housing market is finally starting to thaw. So here we go again, guys. We got more optimistic news coming out of the gates for next year, or this year. It says, after nearly 3 years of grappling with an expensive housing market, homebuyers are showing signs of getting used to it, which is what I just talked about. So though the data is still preliminary, it points to an emerging trend in which house hunters are adjusting to higher mortgage rates. Home sales momentum is building. That says Lawrence Yun, of the chief economist at National Association of Realtors, says consumers have grown accustomed, that didn't mean to zoom that in, guys. Consumers have grown accustomed to a new normal of mortgage rates between 6 and 7%. It says even if homeowners with ultra low mortgage rates remained reluctant to move, a phenomenon known as the lock-in effect, that dynamic may be easing among those relatively with higher interest rates. And that gradual shift in home buying attitude is giving the housing industry some hope for 2025. And we go on to talk about early indications of a thawing housing market. So we've got two major pieces of data that suggest consumers are begrudgingly accepting a new, more expensive housing market, and the recent increase in home sales and the uptick in the housing sentiment, which we just talked about in that last article. So in October and November, which the latest months of data was available, home sales increased in both of those months. That trend was broad-based. The number of homes sold across most of the nation grew between October and November as buyers snatched up properties during a brief period when interest rates fell close to 6%, and I'm going to show you exactly what that time frame was. So this is a very good segue over into what's going on here with interest rates. So as you all know, the Fed dropped interest rates a full percentage point over the last 4 months, but mortgage rates have gone up. Now there's a lot of reasons for that. I'm not going to kind of get into the weeds about that, but as of right now, we're sitting at a 7.17% fixed interest rate. That is just crazy considering the Fed has cut, but like I said, there's a lot of economic factors that go into that. But as of right now, we're at 7.17%. But let's go over here and take a look. That article just talked about home sale activity being up in October and November, and that is because if we go back to 9/11 of 2024, that is because interest rates at that point dropped to 6.11% for a brief 2-week period in time. Since then, we have gone right back up over here, and we sit at this 7.17 mark. So guys, it just is what it is. But I do expect we see interest rates fall going into 2025. So let's talk about what's going on with Realtor.com's forecast, and then I'm going to show you guys. Let me get back up at the top here. Kind of got a little bit off cue. Realtor.com's 2025 forecast, okay? So what they are saying is kind of a composite of what we've already kind of talked about, but here's what they are saying. In 2025, they are expecting interest rates to average 6.2% by year end. And that's kind of the consensus of everybody that I'm following as well. And then existing home price appreciation, they're expecting that to go up 3.7% on a national level. So again, guys, even though rates are high, inventory is still low. And we are going to continue to see that home price appreciation happen, I think, for a good long while, because we are literally 5 or 6 million homes short of what the demand is showing. So in that, it's supply and demand, right? We're going to continue to see those home prices go up, unfortunately, for a lot of folks. And they're saying existing home sales next year are going to go up 1.5%. And then the existing inventory is going to go up 11.7%. So as we go down here, guys, I'm just going to highlight on a couple quick things here. It says, again, this past year brought a surprising upward trend in home price growth despite the persistence of high mortgage rates. Again, they're expecting home price appreciation to be up 4%, which is higher than last year in 2023 when it was at 1.1%. So there you go again. So what I wanted to do now is to take you down to some local data that they are predicting here for Charlotte. Let me skip right down through here. And for Charlotte, which some of this I don't necessarily agree with, but this is what they are saying. So when you take a look at the different metros that they track, they give you a 2025 sales growth percentage and a price growth percentage. So what they're saying for Charlotte, which is really interesting, is they're saying that basically Charlotte is going to see a 15.7% increase in the amount of home sales next year. And they're saying home price appreciation for Charlotte is going to be 8.4%, which is well over 4.5% of what they're saying that the national average is. All right, guys, so what I want to do is take you over and show you some stats that are going on here in our local market. So when we talk about new listings in Charlotte, now this data is from November. If I would have waited to shoot this another couple of days, I would have had the December data, but this is going to be, as close as we can get right now. But for the new listings were up 7.3% in Charlotte year over year. But as you can see, from October to November, they've actually dropped from 4,494 down to 3,800. So again, some of this is seasonality though, so we got to keep that in mind. But I do believe when we get into the spring market, we are going to see a lot more homes hit that market. And I say that because a lot of these folks that are sitting on these 2.5% to 3% interest rates, we're going into almost year number 4 as rates have gone up. So a lot of these folks are going to need to make moves for different types of reasons. And that's why I think we're going to see some more inventory. So next is on the list is pending home sales. So pending home sales, again, we have an increase of 22.5% compared to last year. So compared to the previous year, more people this year are buying homes. But as you can also see, going from, back to, let's go August to November, we've got a decrease right here. As you can see, these numbers at 35.92 in August down to 31.94. So there you go with that. So moving on to our next one I want to share with you guys is closed sales. Again, only up 4.5%. Again, you see the decrease from September over to November. And then let's go ahead next and chat about days on market. So this one here, what we have seen over the last several months is houses staying on the market longer. That has been by far the biggest thing we've noticed. Some of these properties that would have sold in a matter of a couple of days are on the market 90 days to 120 days. It's interesting, but it is the market that we're in. But you can see days on market up 36.4% in November. And if we go back to June, we said at 31 days on the market. And again, we're here at 45. So seeing a lot of active inventory just sitting out there on the market. Average list price though, up 7.7% year over year. That sits at 500,100. That's crazy, guys. Now, I don't necessarily care for the average list price. I would rather take a look at other data like median sales price and those types of things, but that is there for you. Let's take a look at the median sales price now. So the median sales price year over year is up 3.7%. We sit at 392,012. And again, that actually has come down. So even though we're expecting to see some price appreciation next year, we have seen a softening. As I mentioned, a lot of these properties have been on the market a long time, so sellers aren't getting as much as they used to on these. So we've seen a softening, but we've still seen the prices remain high. In fact, if we go back to June of 2024, we're at 405,915 for our median sales price. And again, dropping down here to 392,012. All right, a couple other ones to talk about. I just talked about percentage of list price received. That is down 1.2%. So this is basically saying that sellers are getting 95.7% of what they've listed for. So a simple example, if someone lists a house for $100,000, they're generally going to get $95,700 for that house. And as you can see, as we go back, even in the early spring through the summer, we're 97.6. So we've seen that difference right there in that drop off. And then the last thing I'll show you is the months of supply. Months of supply is sitting at 2.1 months. Actually, no, that is not true. That is sitting at, let me clear that out, 2.6 months right here. An increase of 23.8% year over year. So what that is saying is if no other houses came on the market, it would take 2.6 months for everything to sell. But if you notice, and we go back to the lean months, and I mean, we can go leaner than this if we go back to 2022. But last January, we said at 1.8 months of supply up to 2.6. That's a pretty good increase in just about 12 months. So as again, I expect more inventory here to hit the market in the spring. And I think we're going to see a pretty busy spring market. So guys, if you're a buyer out there in the market and you need our help in your home search, please reach out to us. We'd be happy to help you out. Or if you just have a general question, give us a call, shoot us an email, whatever is easiest for you. If you want to get it on a one-on-one Zoom call with me, a lot of folks do that to talk about their situation going into the year. Happy to do that. There's a QR code right there on your screen, or there's a link in the description below. Just click on that, get on my calendar. We can talk about what you're looking to do and how I can best help you going in to 2025, guys. So again, don't forget to subscribe to the channel. We got a ton of videos on the horizon, a bunch of different topics and stuff coming up. So subscribe to the channel, like this video, drop a comment below. Let me know if you think I'm right, if you think I'm wrong in the things that I'm saying. But one thing I will say about interest rates, my prediction is by the time we get to December of next year, we are going to be in the high 5% on interest rates, and I have a lot of factors around my thinking about that. I think the labor market is eventually going to show signs of more softening, forcing the Fed to maybe make another cut or two that they don't anticipate making now. I just think the evolution of the economy around that labor market is potentially going to get us into the high 5% rate on those rates. So guys, all right, enough of that. Thanks so much for watching. I appreciate you guys watching. Drop a comment below, give me a call, whatever I can do to help you out. And as always, make it a great day.